Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is December 3rd, 2025, and we're diving into Leslie's latest earnings report for the fourth quarter and fiscal year 2025. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Leslie's, a leader in the U.S. pool and spa care industry, has just released their Q4 and full year 2025 financial results. There's a lot to unpack, from sales figures to strategic initiatives aimed at improving their financial health.
Revenue and profitability overview. Let's start with the top line. Leslie's reported fourth quarter sales of $389.2 million, a slight decrease of 2.2% compared to last year. However, their gross profit increased by 4.8% to $150.1 million. John, what does this tell us about their operational efficiency?
Despite the dip in sales, Leslie's has managed to improve its gross profit, which indicates better cost management and operational efficiencies. The gross margin increased to 38.6% from 36.0% last year, showing that they are effectively managing their cost of goods sold.
And what about their earnings per share?
Leslie's reported an adjusted EPS of 9 cents, which is below the forecasted 1.09 by analysts. This discrepancy highlights some challenges they are facing, despite improvements in certain areas.
Strategic initiatives and cost management. Leslie's has announced some significant strategic initiatives, including the closure of 80 to 90 underperforming stores. How is this expected to impact their financials?
The store closures are part of a broader strategy to optimize their operations and improve profitability. By closing these underperforming locations, Leslie's aims to yield immediate EBITDA improvements for fiscal year 2026. Additionally, they are focusing on reducing inventory by 10% year over year and implementing direct cost reductions of $7 to $12 million.
It seems like a comprehensive plan. How do you see this affecting their future performance?
These initiatives are crucial for strengthening their balance sheet and rebuilding stakeholder confidence. If executed well, they could significantly enhance Leslie's financial health and set a solid foundation for future growth.
Financial health and liquidity. Let's talk about Leslie's financial health. They reported available liquidity of approximately $168 million with no borrowings under their asset-based lending facility. What does this indicate?
This level of liquidity provides Leslie's with a buffer to manage their operations and strategic initiatives without immediate financial strain. However, their cash position has decreased by $44.2 million year over year, which is something to monitor closely.
How critical is this liquidity for their ongoing transformation?
It's quite critical. Having sufficient liquidity allows Leslie's to invest in their strategic initiatives, such as store closures and inventory management, without compromising their operational stability.
Market reaction and future outlook. John, how has the market reacted to Leslie's latest earnings report?
The market's reaction has been mixed. While the strategic initiatives are promising, the significant net loss of $162.8 million in Q4 and a full-year sales decline of 6.6% have raised concerns. However, their guidance for fiscal 2026, with sales expected between $1,100 million and $1,250 million, shows a cautious optimism.
What should investors keep an eye on moving forward?
Investors should watch how effectively Leslie's executes its strategic transformation plan and manages its cost structure. The upcoming fiscal year will be crucial in determining whether these initiatives can translate into improved financial performance.